Hi there. Welcome to Prices at the Pumps, our weekly look at all things energy related. Scott Squires, pleased to be joined by the energy expert, Dan McTeague. Dan, a laundry list of things to talk about today, but first things first, tomorrow and Friday, prices at the pumps are set in the Atlantic region. What do you got for us?
Well, let's start with Newfoundland. They're going to see a small decrease in the price of gasoline, maybe about a half a penny. And of course, reverse to that, because it tends to move in very different directions. Diesel will be up about maybe a penny, not quite a penny. So really not a lot to write home about. For the rest of the Atlantic provinces, so PEI, New Brunswick, Nova Scotia, I would expect, given today's pre-US Thanksgiving market doldrums, which we see every single year, energy prices are down a little bit. So that, half penny decrease that you saw for Newfoundland for Thursday will actually be a little closer to maybe 3/4 of a cent by Friday. And for diesel, look for diesel to increase about a full penny, maybe 1.1 cents a liter. Same with furnace and heating oil. And so again, not a big impact. Gasoline going down a bit, diesel going up a bit. But it does show what we see at this time of late fall, where prices can be very sticky at some points, and really governed by supply being adequate and demand being relatively weak. Now that the Thanksgiving weekend will have come and gone in the United States, the area of greater demand, we usually see prices actually drop. So this time next week, we may actually be looking at an even greater decrease for both, especially for gasoline, not so much for diesel.
Dan, we know that utility and review boards are the wild cards, but basically what you're saying is, at least in the short term, a little bit of relief at the pumps for Atlantic Canadians.
It should be. That's what the real market indicates. Now, there is, of course, a synthetic market that is put in place by regulated authority, and that's something I can neither predict nor control. But if we were to follow the free, open, transparent markets, which govern pricing pretty much all across North America, then what I have indicated is a slight decrease for gasoline and a slight increase for diesel should hold, not just for Thursday for Newfoundland, but also Friday for the three other Atlantic provinces.
Dan, a number of stories caught my eye at saltwire.com this week. So there's a couple of them that I just want to basically give you the headline and then ask you to weigh in and give your comments. And the first one, it made big news here in the region, and I think caught a lot of people off guard. And again, a story that appeared on saltwire.com. Dartmouth-based Maritime Fuels declares bankruptcy. This all kind of broke late last week. I know you and I talked offline about it, but your initial reaction when you heard that, Dan?
Well, it's become a pretty big issue. Heating oil, furnace oil, the carve out by the federal government, and of course the significance and the importance of the fuel, for which there is really not a lot of readily available alternatives. So it did suggest to me some reason for extraordinary concern. The reasons, of course, behind it may be several, but it's very hard to interpret silence from Maritime Fuels. But a couple of things we do know: energy prices, particularly diesel and home heating fuel, stove oil, furnace oil, and the like, are down significantly from last year. This time last year, you were paying about 50 cents a liter more than you're paying today. Companies on that scale tend to hedge. In other words, they look at the future and say, well, where do we think these prices are going so that we can protect our customers and at the same time not be underdone by our competitors? In this case, I tend to think my spidey sense tells me that perhaps they hedged wrong and they wound up short of money, which is what triggered the bankruptcy. They run on very thin margins. The second factor may also be due to, perhaps a company that might have been ambitious at some point, undertook some kind of financial commitment in acquisition of other companies or a company. Whatever the case may be, the reality is that it's left a lot of people scrambling, not just with who's going to be this new supplier going forward, but there are many people who've had credit with that company and who would have expected those credits to be used this year as they head into what is now beginning to be the first indications that we're heading into colder, more wintry type weather, not just here in Atlantic Canada, but even in Europe.
And again, that's a story that you can read more about and follow at saltwire.com. And again, another story from SaltWire, Dan. We've talked about the carbon tax, right? And what happened when the federal government announced a pause on home heating fuel in the Atlantic region and kind of all of the fallout from that. But again, a story that appeared yesterday, and again, I'll just read you the first part and again, ask for your comment and to weigh in. Nearly 4 to 5 Atlantic Canadians want last month's carbon tax carve-out to extend more than just home heating oil. And that's according to a new poll commissioned by the Canadian Taxpayers Federation. Dan, you follow this really closely. What's your feelings? What's your take when you see a poll done by the Canadian Taxpayers Federation that says 4 to 5 Atlantic Canadians want that carbon tax pause or carve-out to extend beyond just heating fuel?
Well, I think CTF is on to what I think many people have now concluded, that the carbon tax regime and the rebate or the buy and get back some money system doesn't work. And it doesn't work because it tends to go into other areas of the economy, driving up the price of things like, for instance, food, for which people well noted in here in Atlantic Canada, food professor Sylvain Charlevoix has spoken many times. But there's no doubt that the carbon taxes, and I'm not just referring to one, applied to everything, is in fact a major driver of inflation. Now, this is something that Dan McTeague and Canadians for Affordable Energy have been putting forth for quite some time, past several years, at least since 2017, 2016. It's now become widely apparent, and the Bank of Canada itself's chair, Governor Tiff Macklem, has had to finally admit it's worth about 16% of the inflationary impact. And so, I think it's pretty clear Canadians, unless they have a lot of money and a big fat, bank account or a nice wallet they can walk around with, those who are struggling to make ends meet, and that tends to be the majority of Canadians, are decidedly against the carbon tax regime, on which is a signature policy of the federal Liberal and NDP government. And so for that reason, I suspect that there will be a showdown on this issue. And as I've said from my years of experience as a politician, handling the consumer issue, trying to ensure that energy prices were affordable, not just in my time as a career there, but also today. All of these things are very predictable. So will be the outcome of the next election, in which those two parties that have been advocating this will be soundly defeated unless there's a major change in the direction and the policy of the coalition in the next 18 months or whenever they decide to call an election.
Well, Dan, it almost feels like we're in an election campaign now with some of the commercials and ads and things that you're seeing. And we'll certainly keep a close eye on this and continue to talk about it week over week here on Prices at the Pumps. And another one, again, on SaltWire, our crew have got all of these topics covered right down, to the finest point. But you referenced actually last week or a week before your predictions on where you thought the next inflation numbers would go. And again, from saltwire.com, Canada's annual inflation rate eased more than expected to 3.1% in October, largely due to lower gasoline prices, what we talk about, and core inflation measures edged down to their lowest levels in about 2 years, and that comes from Stats Canada data. You were predicting where the next inflation numbers would be, but when I read that to you and what Dan, again, your thoughts, just weigh in with your views.
Well, the direction was correct. SaltWire had it right. There is, in fact, a rather substantial decrease in the rate of inflation led by energy prices. Energy drives prices up. They drive prices down. It's one of the most significant factors. And those who dismiss it, they can't really come out with accurate data. I thought it would be closer to, and we mentioned this here last week, Scott, it would be about 2.8%, but 3.1 isn't very far off. And it does suggest that the federal monetary prescription to combat inflation has been the central bank's desire to raise interest rates. And that's one of the reasons why it didn't fall as much as I thought it would be. That aside, what we now look at, and you're going to have to start to consider, all of us here, the word deflation, not inflation, but deflation, where the value of everything begins to fall so dramatically as a result of some of the prescriptions of the government. What concerns me is not just so much that people stop spending, energy prices have dropped. It's that as in the interim, the federal government and other governments have borrowed so heavily that they will continue to serve as an artificial borrower and really crowd out the credit market. If that happens, and I believe it will, it means interest rates will remain high, and therefore the Bank of Canada will continue to maintain high interest policies. So this is not, just a one-off small issue. I believe that next month, so just before Christmas, we're going to get another obvious indication of year-over-year inflation. I believe it will fall even further, and we will be back towards the $2, the 2%, 2.5% target. But that is not news to celebrate, because as I said, given the amount of federal government borrowing, we're spending $50 billion more in this country than we're actually taking in. Provinces are doing the same. Sooner or later, we'll find ourselves back to where we were back in the early 80s. And when I was a member of parliament in the early 1990s, where governments are going to have to make some very, very unpopular decisions about cutting spending. And that's going to hurt the very people that can least afford it. That's my concern. And those numbers should be a wake-up call for all policymakers in this country, regardless of their political stripe.
I know, Dan, there's a big federal presentation today. We haven't heard it yet. There's been a little bit of leaking online of some of the things that might be in this big fall announcement, but we'll have the details and we'll dig into that more next week and see if there's a couple of things that really stand out to you. Because again, the election could be as much as 18 months or so away, but it almost feels like we're in an election campaign. But again, stuff like that and what comes out today, we'll dig into that next week. Before we wrap up here, Dan, and we've talked about a number of pressing issues here. Is there anything else, just from your point of view, that you're seeing right now, either domestically or internationally, that's kind of causing your eyebrows to raise and that you want to pay attention to?
Really important question, Scott, because I'm going to be watching what happens on Saturday. This time of year, again, as I mentioned at the outset, prices tend to fall. Markets get a little depressed. We don't have the Santa Claus rally for a few more weeks. So we're going to start to see prices move down for energy, and we can all cheer that. What I am concerned about is what I'm going to see on Saturday, and that's that OPEC Plus has its meeting as to whether it's going to decide to continue production cuts, stop the production cuts, or extend the production cuts, or deepen the production cuts. And here's what I mean. OPEC cut back 2 million barrels. The United States filled the gap. They were actually able to produce more. Saudi Arabia on its own cut another million. The United States met that again. The question is whether or not OPEC is satisfied with the numbers, what we're selling oil for today, in the range of $78 to $82 a barrel for Brent. My sense is that they would like to see closer to 90. No one's suggesting 100. To get there, they're going to have to at least extend beyond December their commitment to keep 3 million barrels off the market. Can they do that? Yes. But there was one small fly in the ointment, if you will. It's called Iran. Because the United States government and the Biden administration has given Iran a few $billion of its money, sanctioned money, on the assumption that they would play nice on production of its nuclear ambitions, they may have actually fueled Iran's ability not just to sell more oil to China, but also, as we know, fueled some of that money, which may very well find itself into the hands of organizations that are involved in doing some dastardly things in the Middle East. That aside, it's an important note that my eyes won't be focused on the football game or the hockey game on Saturday. It'll be to see what happens in Vienna at OPEC this Saturday, November the 26th. Very important date, and that will really govern where we're going in terms of prices over the next few weeks. And you heard it here first here on SaltWire. Important people understand that that's as far as energy prices are concerned for the next several weeks. That's the must watch, must attend, and must analyze event. You're not going to hear about this in a lot of places, maybe until next week. But if it turns out that the production cut continues and that we do in fact see OPEC decide to maintain its position, I think we're going to start to see a bit of a rally in energy prices at a very time when cold weather begins to kick in. We could see higher prices ultimately by Christmas.
Dan, something we'll definitely be expanding on and talking more about on prices at the pumps next week. Final thing for you, we've got a loyal and faithful following that grows each and every week with prices at the pumps. But last week on X, a follower, 8Kobe24, replied to one of the posts for last week's episode saying to you and myself, it would be great for Gas Price Wizard, being you, Dan, and the food professor, Sylvain Charlevoix, to discuss the carbon tax and other stuff on a show one day. So you and I each week have these wonderful conversations. What's your thoughts on perhaps me reaching out to Mr. Charlevoix and seeing if he'd be willing to jump on in an episode at some point and have a little chat? What do you think?
Well, look, the food professor has done for food prices what Dan McTeague, the old retired workhorse, political workhorse, has done for energy. I think the two of us teaming up would be great, and I think there's a lot of commonality. Mr. Charlevoix, Dr. Charlevoix, has done some great work at identifying not just food prices, where they're going, but more recently, why they're going there. So I think it would be great, and perhaps two is better than one. I can guarantee you with Dr. Charlevoix, that's certainly an inevitable outcome.
Well, we'll see. This could be an unofficial invitation to Mr. Charlevoix, but perhaps we can have a special edition prices at the pumps with him as a guest. But so stay tuned for that. And a big thanks to 8Kobe24 on X for being a follower or watcher and listener of Prices at the Pumps and for suggesting that. And outside of that, Dan, we appreciate your time as always. We wish you the best for this week. Oh, and before you go, why don't you tell folks how they can find you, where they can listen to you, watch you when they're not checking you out here on SaltWire?
Well, I'm going to say the best way to find out where I'm at is be here in SaltWire. I give a lot of intel that I don't give to a lot of other, in fact, no other media. So this is where you want to know what Dan's latest is. This is it. But for those who are interested in gas prices outside of Atlantic Canada, that's where the price changes day to day. Gaswizard.ca. And of course, if you have any questions on policy, then info at affordableenergy.ca or president at affordableenergy.ca.
One very important question before I wrap up with you, Dan. Is your tree up yet?
It's in the next room waiting. And my wife keeps telling me, get it done. And I think I'm running out of some goodwill there. I may be spending a very cold winter, at least Christmas in the garage if it's not up soon.
And the follow-up question is, if it's in the room waiting and your wife has kind of got the, hey, Dan, next week's show, will the tree be up?
I'm going to make sure. Otherwise, Daniela and I will be probably filing for a divorce. So it better be.
Fair enough. I look forward to seeing the picture. We'll exchange tree pictures. How's that?
Absolutely. Let's do that.
All right, Dan. Enjoy the rest of your day, sir. Have a great week ahead, and we'll talk to you again next week.
You as well. Thanks, Scott.
Thanks, Dan.